the US economy and also for India. And talking about India, will this 25 basis point cut by the US Fed lift the mood on the Lal Street? Mohit Gang will be here to tell us all about that. You're watching this edition of Morning Brief at 9. You're watching Morning Brief at 9 right here on News 9. First up, the headlines. India and the US push forward on bilateral trade pact as officials review tariff hurdles and seek breakthrough to boost economic ties. Meanwhile, US calls India's latest trade proposals some of the best offers Washington has ever received. SpaceX CEO Elon Musk indicates fresh push to bring Starlink satellite internet to India as government discusses last-mile connectivity for remote regions. Prime Minister Narendra Modi holds a telephonic conversation with Israeli Prime Minister Benjamin Netanyahu. Both leaders express satisfaction over strong momentum in India-Israel strategic partnership. UK firms deepen India presence with 5.7 lakh crore rupees turnover and 5.5 lakh jobs as FTA-driven growth boosts numbers of opening companies to 794. Britain meets India 2025 report shows. Indigo chairman Vikram Mehta issues public apology as airline launches external review into mass cancellations and submits revised schedule after DGCA orders the 10% winter flight cut. DGCA orders nationwide airport inspections as Indigo disruptions escalate, sets up oversight team while Delhi High Court questions government over spiraling passenger crisis. The Enforcement Directorate seizes 55 crore rupees from Reliance Infrastructure in Hawala-linked FEMA probe. Alleges Anil Ambani Group firm diverted NHAI project funds through shell companies and routed money to UAE amid mounting financial stress. Cipla launches the once-weekly drug Urpeak in India to tackle obesity and type 2 diabetes under collaboration with Eli Lilly, expanding access to advanced chronic care therapy. And US Fed delivers the third rate cut, lowers benchmark to 3.5% to 3.75% amid divisions over future easing. The big question, Fed rate cut to lift market mood. We discuss on the show. Top story this morning, India and the United States reviewed progress on the long-pending bilateral trade agreement on Wednesday as officials from both sides met in New Delhi for a fresh round of negotiations. The two-day talks set to conclude on December 11th aim to resolve differences and move towards a mutually beneficial trade pact that could transform one of India's most important economic relationships. On day one, Commerce Secretary Rajesh Agarwal met US Deputy Trade Representative Rick Switzer, with both sides exchanging views on tariff concerns, market access, and the broader state of India-US economic ties. Indian industry is hoping for relief as the US remains India's largest trading partner, accounting for 18% of India's total exports. Exporters say the high duties are hurting shipments even as they try to diversify to other markets. Meanwhile, the United States is calling India's latest trade proposals some of the best offers Washington has ever received. A top US trade official, Jamison Greer, told the Senate that India has come to the table with unusually strong proposals as the two sides open a fresh round of talks in New Delhi. Greer admitted India is still holding a firm line on sensitive items, especially meat, dairy, and certain crops to protect domestic farmers and food security. He also said India is participating very actively and is now seen as a key alternative market for US producers at a time when global grain stocks are rising. He also said that India is a tough nut to crack, but negotiations are progressing well. Remember, the US initially proposed a 25% duty, citing $46 billion trade deficit in the year 2024-25, followed by another 25% penalty for India's purchase of Russian crude oil. India has made it clear that resolving these tariffs is essential for signing the first phase of the bilateral trade deal. Commerce and Industry Minister Piyush Goyal, speaking in Jaipur, said talks are continuously progressing and that India is moving forward toward a bilateral agreement. This is the second visit by US officials since the tariff hikes, the last round in September. Negotiations are happening on two parallel tracks. First, a framework deal to address tariff barriers, and then a more comprehensive trade pact. Leaders of both countries had set a goal to conclude the first tranche by fall of 2025. But so far, despite 6 rounds of talks that have taken place, the trade deal is still some distance away. Listen in to what Piyush Goyal said.
यूनाइटेड स्टेट्स ऑफ अमेरिका की टीम मंगलवार से भारत में है और उनके साथ बातचीत निरंतर प्रगति कर रही है। बायलैटरल ट्रेड एग्रीमेंट की तरफ हम आगे बढ़ रहे हैं।
And even as that bilateral trade, the direction being taken but the deal yet to be sealed, there's a massive boost for India's artificial intelligence push. Amazon has committed to make an additional investment of $35 billion over the next 5 years. Now, Amazon's new commitment is over and above the already committed $40 billion of investment in India. Amazon is looking at boosting local cloud and AI infrastructure in India and potentially creating 1 million jobs until 2030. Remember, Amazon's announcement comes just a few hours after Microsoft CEO Satya Nadella announced a $17.5 billion commitment to build AI infrastructure and skills needed to accelerate AI development in India, the company's largest ever investment in Asia. Now, this comes just months after his January visit, where Satya Nadella had announced a $3 billion investment focused on cloud capacity, AI skilling and making India an AI-first nation. Now, remember, in October, Google had committed building a 1 gigawatt data center in Andhra Pradesh's Vizag for a commitment of $15 billion. All this at a time when Apple is already doubling down on India manufacturing, hoping to up its production and its output of iPhones by 2027. Now, in the last 48 hours alone, India has received big tech investment commitments of over $67.5 billion. No doubt, AI is the flavor of the season and India is the destination of choice for leaders across the AI spectrum. The excitement is not limited to the Magnificent Seven alone. Even Cognizant and Intel are in the fray. Prime Minister Modi had met with Intel CEO Lip Bhutan, a key player for India's semiconductor ambitions. Well, what is the big tech's big focus on India all about? Joining us this morning to discuss that is Dr. Srinath Sridharan, policy researcher and corporate advisor. Good morning, Srinath. Pleasure having you back here with us on News9. First up, AI definitely seems to be the flavor of the season, but why the big push towards India? What has India done right to attract such investments?
Morning, Karthik. I think we have a large young demographics and we are also in consumption economy. So from that sense of the world, it really, I'm sorry, I'm going to be a little dampener here. It doesn't create what I call intellectual property for India. We are going to continue what I've traditionally called as cyber coolies. We had a wave of ITES in the 1990s. If you remember the Y2K problem fix, then came the wave of BPOs, KPOs and GCCs. So in the larger hierarchy of knowledge ecosystem, we are still way down in the pecking order, so to speak. It is still the dollar arbitrage, the labor arbitrage that we'll continue doing. Unless we own intellectual property for all of these AI, we still will not have digital sovereignty in the decades or years ahead. So to me, the challenge is, while it is very exciting and rightfully so, we must encourage more tech companies to set up base here. How do we even regulate them? These are all big tech. We can't even take them to court. If you remember the entire case about the media organizations have taken OpenAI to court for infringement last year, it is still not been solved. So structurally, from policy perspective, Our laws are yet to evolve around AI. We don't have the supervisory capacity and the muscle to rein in big tech. But yes, it's great narrative for saying that India has attracted X number of billions. As you were excited about the big seven. The reality is our education system and the STEM ecosystem also is yet to evolve.
Right.
So my bigger worry is unless we can become a product nation ourselves, these are all only mere mechanics of it.
All right, mere mechanics, definitely big headlines, Srinath, but one can't deny the fact that $67.5 billion in foreign direct investment committed by the top three players in the Magnificent Seven pact in the last one quarter are likely to A, add to the economic growth of the country, and B, also create jobs. So can that be taken away?
So simply put, Karthik, I mean 141.43 billion people, and we're going to create what, about 2 million jobs. With all these announcements put together, if you add it up, it doesn't even come to 2 million jobs. And let's be very practical. A lot of these MOUs are MOUs until they actually pan out to actual jobs. For example, today, I mean, I'm not being condescending or disrespectful, but unless you create higher value employment, there is no point in becoming extension of what we are currently doing. The reality is AI is still evolving. We don't know the future of work, and we don't know work of the future. So are we taking the big tech's word that it is going to create jobs as at face value? And I think that's a policy challenge that I have. Where is our own thinking, our own ecosystem thinking? Because if you look at the other side, you had Bill Gates, Elon Musk, and including AI researchers, various esteemed professors talking about the massive disruption at scale for jobs that's going to happen. And we're not factoring that in policy. So to me, my bigger worry is while these are also very exciting, they're no different from saying it's, I mean, in the F1 parlance, we'll call it the pit stop, right? I mean, you can come and change your tire and get out. Yes, you need to get the pit stop right. But where are we going to create jobs? So I'm a little concerned. Politically, I think it's a great optics. It will do good for both the politicians and the bureaucrats. But what about our ecosystem? Are our schools and colleges ready to build on this? Are Indian corporates?
But Srinath, sorry to cut you short, but is that the responsibility of the big tech, or is that the responsibility of the government? While I understand that there is a business opportunity for the big tech to look at investments in India because obviously they get the cost arbitrage, but creating the education framework and creating skills for high-end jobs is not something that we can potentially hold the big tech accountable for.
Oh, absolutely, Karthik. You said that. I mean, it is a job of the Indian government and it is a job of the Indian corporates. I mean, just last year, we must remember, this current calendar year, we must remember, a large tech company, one of our darlings in the stock market, spent nearly 18,000 crores in doing share buyback and not investing in R&D. And these are the people, the doyens of governance who keep speaking about how we must innovate. So how do you then compete with the big tech? So to me, the worry is from the larger scale, are we going to surrender to the mights of the big tech in the name of short-term jobs? And looks like I think we've already done that.
All right. So, of course, the big question on jobs continues to loom large on India, Srinath. But at the end of the day, India happens to be walking at least on that road towards data sovereignty. You said we are potentially decades away from data sovereignty. But the fact that these data centers and this cloud infrastructure is going to be housed here in India, does that not give India the clear pathway towards data sovereignty?
So I think there are two aspects, right? One is the chipsets and the physical infrastructure that will be housed in India. The fact is, as the codes, we don't even have control over those codes that will control that entire data. And that is where I mean by where is our own intellectual property around data management? We really haven't built it up. And if at all we build it up, unless the world is ready to pay for it, it is of no value at all. What I call as mercantile thinking. So in the digital sovereignty, unless you have digital mercantilism, why is it that Microsoft has been successful over the last 40 years, 50 years? Why is it that we're able to kind of adopt everything that what Meta or Alphabet does? And where is that Indian company's first product? We don't have any. And so while you might still be housed here, how do you even haul them up and hold them accountable? And the reality is, and that's why I said our supervisory capability is still unproven and untested in the digital world. And if we think that just because they come in and invest, for them, look at their balance sheet. It's probably what, the 6th decimal point, and they're also going to de-risk their investments. It's not as if they're putting everything in India.
Absolutely.
So the challenge is, do we own what is made in India? No. Do we own what is created in India? No. unless we can bring some kind of laws that will make it happen for some of those MOUs, it will be very meaningless in the digital era.
All right, it might be meaningless in the digital era, but Srinath can't deny that there is FDI coming into India. FDI at a time when Donald Trump is harping upon making America great again. Here we have an example of American companies investing in India. Of course, there is a business case for them. So is it business first or is it India's AI first approach? That's a big question that is yet to be unanswered. But thank you so much for your time this morning.
Thank you.
Now, staying with the big tech and the Magnificent Seven from the United States, SpaceX CEO Elon Musk has said he is looking forward to serving India with Starlink, his satellite-based internet venture, signaling a fresh push to expand the services into one of the world's fastest-growing digital markets. Now, Musk's comments come after Communications Minister Jyotiraditya Scindia met Lauren Dreher, Starlink's Vice President for Business Operations in New Delhi, to discuss expanding satellite-driven last-mile connectivity across India. Now, Scindia said satellite technology will play a crucial role in fulfilling Prime Minister Modi's vision of a digitally empowered India, helping connect remote, rural and hard-to-reach regions and ensuring broader digital inclusion. And moving away from the United States, well, Prime Minister Narendra Modi has had a telephonic conversation with Israeli Prime Minister Benjamin Netanyahu on Wednesday, with both leaders expressing satisfaction over strong momentum in the India-Israel strategic partnership. They reaffirmed their commitment to deepening bilateral ties and emphasized a zero-tolerance approach to terrorism in all its forms. Prime Minister Modi also reiterated India's support for a just and durable peace in West Asia, including the early implementation of the Gaza peace plan. The leaders exchanged views on the regional situation as New Delhi continues to call for a ceasefire, the release of all hostages, and a diplomatic resolution to the Israel-Hamas conflict. And on to Indigo now, troubles which are now coming towards the end of 2 weeks. Well, Indigo has announced a full-scale investigation into the operational meltdown that caused mass cancellations and delays earlier this month. Indigo chairman Vikram Singh Mehta said that the airline will bring in an external technical expert to work with its management and board, helping determine the root causes of the crisis and ensuring that such breakdowns never occur again. In a video message, Mehta said that the review will examine every aspect of the disruptions which hit thousands of passengers between December 3rd and December 5th. He also issued a personal apology acknowledging missed family gatherings, business commitments and international connections, saying, "We are truly sorry." Now, Indigo has now restored full network operations, running reportedly over 1,900 flights across 138 destinations, with on-time performance now reportedly back to normal. Meanwhile, the airline has submitted a revised winter schedule to aviation regulator DGCA after the government ordered a 10% cut to its winter schedule to help align flight operations with available pilots. Indigo was originally allowed to operate around 2,200 flights a day. This winter, meaning roughly 200 flights per day, will now be trimmed from that original schedule.
On 3rd December, an unexpected chain of events led to large-scale flight cancellations. This continued into 4th and 5th December. Thousands of our passengers were left stranded. Many missed important family events, business commitments, medical appointments, and international connections. Baggage was delayed or misdirected. I know how much distress this has caused. I want to say very simply and very clearly, we are sorry. For the last several days, I have been urged to make a statement. However, I chose to wait because the board and I felt that our first duty was to support the CEO of Indigo, Peter Elbers, and his team, restore operations and help passengers who were affected.
Meanwhile, the Director General of Civil Aviation, DGCA, has ordered senior officials to conduct on-site inspections at 11 major airports over the next 2 to 3 days as Indigo continues to face large-scale disruptions triggered by crew shortages. Teams will assess safety, operational readiness, passenger handling, queue management, and the airline's response to delays and cancellations. Officials must submit detailed reports within 24 hours of each visit. Now, this comes after the DGCA set up an 8-member oversight team with 2 officers stationed at Indigo's headquarters to monitor cancellations, refunds, compensation, and on-time performance. Meanwhile, the Delhi High Court has questioned the centre on why the crisis was allowed to escalate, calling the situation where lakhs were stranded and fares spiked deeply concerning for both passengers and the Indian economy. Time for a very short break, but coming up on the other side, the US Fed has decided to bite the bullet, a 25 basis point interest rate cut. We'll bring you all about that and what Donald Trump has to say about it after the break. And we'll also discuss with Mohit Gang what is the likely knock-on impact on the US Fed rate cut on the Indian markets. That and more on the other side of the break. You're watching Morning Brief at 9.
Powered by Servo Hypersport F5 when speed is your default.
25 लाख का हॉस्पिटल बिल है, कितने पैसे कहाँ से आएंगे?
पैसों की चिंता आप मत कीजिए पापा।
मैम, सर का हेल्थ इंश्योरेंस क्लेम अप्रूव हो गया है।
आप?
पॉलिसी बाजार
पर 0 GST के साथ अब 1 करोड़ का हेल्थ इंश्योरेंस सिर्फ 550 रुपए महीने से शुरू।
I am really motivated to grow my career, learn new skills and prove myself.
अगले हफ्ते जॉब इंटरव्यू है, इंग्लिश में प्रैक्टिस करें?
Sure, let's try some.
I want good career, new skills, खुद को प्रूव करना है।
Great, you can try. I'm really motivated to grow my career, learn new skills, and prove myself. और हाँ, तुम ये भी बता सकती हो कि इस इंडस्ट्री और इस कंपनी को लेकर तुम क्यों से?
ये बेस्ट है मैम।
पर पहले वाला क्यों नहीं?
अजय भाई! This one's for you. बिल्ला ऊपर से इंश्योरेंस देने के लिए।
ऐसा क्या है इसमें?
एडवांस क्वालिटी। 1 साल में पेंट को कुछ भी हुआ तो पेंटिंग वापस करके देंगे।
वापस करके देंगे।
वो भी फ्री।
पटेल भाई, you're a rock star.
क्वालिटी पे इतना कॉन्फिडेंस, इसलिए बिल्ला ऊपर से इंश्योरेंस रजिस्टर करो billaopus.com पर।
Our very first Business and Economy Literature Fest 2025 on the 20th and 21st of December at Taj Talkutir, Kolkata.
EIILM presents Bomber Lorry, Associate Sponsor. Mukhara Chowk, Associate Sponsor. Alliance Broadband, Associate Sponsor.
Welcome back. You're watching News9. This is Morning Brief at 9. Well, a divided US Federal Reserve has cut interest rates for the 3rd time this year on Wednesday, but signaled it may now pause. The Fed lowered interest rates by 25 basis points to a range of 3.5% to 3.75%, the lowest in nearly 3 years. Fed Chair Jerome Powell said the central bank is well positioned to wait and see before making further moves, adding that the economy needs years of wages outpacing inflation for Americans to feel real relief.
Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals, in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a 0.25 percentage point. And also, I would note that having reduced our policy rate by 75 basis points since September and 175 basis points since last September, the Fed funds rate is now within a broad range of estimates of its neutral value, and we are well positioned to wait to see how the economy evolves.
And Fed Chair Jerome Powell also said on Wednesday that the Fed's recent overshoot of its 2% inflation target is mostly the result of President Donald Trump's import tax hikes. His remarks come as the Fed cut interest rates by 25 basis points but exposed a sharply divided American central bank with 3 dissenting votes, 2 arguing for no cut and 1 pushing for a bigger 50 basis point move.
If you get away from tariffs, inflation is in the low 2s, right? So it's really tariffs that's causing the most of the inflation overshoot. And we do think of those as likely to, in the current situation, as likely to be a one-time price increase. Our job is to make sure that it is, and we will do that job. But right now, you've got this difficult balance, and there are risks to both sides. There's no risk-free path.
And expectedly, US President Donald Trump has criticized the Federal Reserve's latest rate decision, saying the 25 basis point cut delivered on Wednesday was simply not enough. Speaking to reporters after Jerome Powell's announcement, Trump called the quarter-point move rather small and said the Fed should have done at least double that. He also argued that US interest rates should be the lowest in the world, urging the central bank to move faster as economic uncertainty grows.
Interest rates are going down, except with him, not too much. He did a rather, I would say, a rather small number that could have been doubled, at least doubled. You know, I've wanted to say it, I do say it, I believe it, and we have to get a mindset that when a country is doing well, you don't want to kill the growth. That's what they're doing. They kill the growth. I don't know if you guys even agree with that. They kill the growth because they're so afraid of inflation. But you can have tremendous growth without inflation. Everything goes up with the growth, but that's not inflation. So I think we can do much better than traditional numbers.
And what Donald Trump said, notwithstanding, Wall Street closed higher on Wednesday after the Federal Reserve delivered a quarter-point rate cut as expected. Investors are betting more easing will follow, even as the Fed signaled it will pause further cuts for now. Take a quick look.
U.S. stocks ended higher on Wednesday, with the Dow climbing 1%, the S&P 500 adding about 0.2%, and the Nasdaq adding 0.1%. The Federal Reserve cut interest rates by a 0.25 percentage point on Wednesday, as expected. The market had been muted ahead of the Fed decision as investors, while widely expecting the cut, were concerned the central bank would take a more hawkish tone on its policy outlook. Nancy Tengler, CEO and Chief Investment Officer of Laffer Tengler Investments, said that given the impending release of key data, including next week's non-farm payrolls report for November, investors should be wary of watching every twist and turn of Wall Street's main indexes.
We'll have to see, how this all plays out over the ensuing weeks. And then next week, we're going to get a lot of data. So we'll be able to determine if the Fed is right or wrong in cutting the 25 basis points. So I would watch the market over the next week or two as opposed to intraday.
The rate-sensitive small-cap Russell 2000 index outperformed large caps with a 1.3% gain to close at a record high. Among the S&P 500's 11 major industry sectors, all but 2 showed gains. Industrials advanced the most, closing up 1.8%. Its biggest boost was from energy equipment manufacturer GE Vernova, which surged more than 15.5% after forecasting higher revenue in 2026, signaling strong demand for its AI-related infrastructure. In other AI-related stock news, shares of Oracle plunged more than 10% in extended trading after the company missed a slew of Wall Street estimates for sales, operating profit, and future cloud computing contract growth, a sign that corporate spending on its cloud services may be cooling amid broader concerns of an AI bubble.
All right, so expectedly the Fed has cut 25 basis points and expectedly the US markets inched up, but unexpectedly the Indian markets are absolutely flat this morning. Sensex and Nifty 50 have opened pretty much absolutely flat, a little flirting with red, going back into green. But as things stand right now, the Nifty 50 is a good 230 odd points below its 26,000 levels and Sensex about 84,474. That's about 500 plus points below the 85,000 sort of psychological level that investors are looking at right now. Let's pull up the Nifty 50 heat map and see which are the sectors which are adding to this little bit of gain that we are seeing, and it seems that it is likely to be the IT space. But let's pull up the Nifty 50 heat map first and take a look at which are the sectors in action. As we pull that up, volatility in the Indian markets is also down by a good 2% or so this morning. Well, the IT space is doing well. We'll just come to that in a bit. But the red is actually being added by Reliance Industries and Bharti Airtel, two heavyweights which are leading the losses on Nifty this morning. Reliance is down about 1/3 of a percentage point. Bharti Airtel down about 2/5%. Meanwhile, ICICI Bank also down about 1/4 of a percentage point. Let's look at the IT pack, and that IT pack is which could potentially be the largest beneficiary of the US rate cut. However, Fed Chair Jerome Powell has said no further cuts expected in months to come. Meanwhile, Infosys up about 1.1%, TCS up about 0.4 of a percentage point, HCL Tech up about 0.5 percentage point, Wipro and Tech Mahindra also up about 0.5 percentage point or so. Mohit Gangs joins us this morning, co-founder and CEO of Moneyfront, to just help us understand what should one expect in the next few trading sessions. Mohit, expectedly, the US Fed has cut interest rates. India's IT sector is reacting positively, but beyond that, no movement at all in the markets. What are markets waiting for?
Thank you, and morning, Karthik. Always a pleasure to be on your show. Look, I think, yes, a rate cut from Fed was well anticipated, and I think markets will take it well in stride, and I think US markets have shown a positive ending yesterday night. My sense is India is still going through a structural, I'll not say structural, India is still going through a liquidity churn right now. Honestly, for Indian markets to perform well, we need few parameters to actually work very well. Rate cuts is one part of it. Even in India, the RBI is consistently on a path of cutting down rates, and US has also shown us the way. Having said which, I think the market in the short run is looking at more liquidity, Karthik.
Okay.
And my sense is the primary market inflow is so high in the markets right now that it's kind of absorbing every inch of liquidity which is available. And that's the reason perhaps that secondary market has not been able to inch up or is not finding enough liquidity to kind of mop up the selling which is coming through. So I think unless and until the primary market flows kind of halt a little, along with the other parameters, along with your rate cuts coming through, your macros remaining stable, and a nominal growth of India inching up a little, which means inflation coming up a little. I think those are few things which we will look forward to. But the primary market and the nominal growth, to my mind, are two of the biggest drivers right now.
Primary market and nominal growth rate, well, of course, and for that you need inflation to actually tick up. But, there's also this concern, Mohit, about IPOs and the barrage of IPOs that we've seen sucking out liquidity from at least retail investors, or as well as DIIs for that matter. Is that a real concern at this moment?
Oh, absolutely. Absolutely. Look, I think there are 2 or 3 points about it. Number one, as I said right now, it's sucking out liquidity from the market, and the secondary market is not finding enough legs to stand on its own. The primary market flow is extremely high. Look at just case in point being, let's say Swiggy QIP, 10,000 crores getting mopped up, and I think the subscription was hugely oversubscribed, right? So every day, on a daily basis, there is an event where 10,000 crores are just going out of the market, which is not a small sum of money, Karthik.
Absolutely.
Right? So market has only that much liquidity. And if the primary flow takes up all the liquidity, then there's very little left for the secondary market. So my sense is we need some and I don't know how and when will that happen. We need some bit of secondary money to actually prop up the market. So that's what we will have to wait out for. We can't stop the flow of IPOs. Plus the quality of IPOs, the pricing at which they are coming in, honestly leaves very little on the table for retail investors or for any kind of investor. There has to be some method to madness out there. It's absolutely crazy the way few IPOs are getting priced in the market, and way those are getting lapped up also. So honestly, it just drives me crazy seeing those numbers. But that's the reality of the market.
Absolutely. Well, of course, from IPOs, let's just go back quickly to IT stocks for a moment, Mohit. And IT stocks likely to be the biggest beneficiaries of the US interest rate cut. But at some point, the cut in interest rates is targeted at US inflation. Do you think this 25 basis point cut is actually going to become a driver for US-based companies to also start investing and making those bigger commitments towards their processes? And is there a story here for the Indian IT sector, or is this just sentimental uptick that we are seeing right now? Because IT continues to be a pain point, given the fact that AI has pretty much disrupted the entire game already.
Karthik, look, I've always been a firm believer, and I think on your show itself, I've always maintained that IT sector is very highly geared to rate cuts in US and in India both. It's an extremely sensitive sector to US rate cuts, given that bulk of or the big boys of Indian IT kind of thrive on US export of services, right?
Yeah.
So that's a big driver for them. And as US companies improve their bottom lines, a bulk of that goes into IT, because US is a heavy spender on IT innovation and all kind of IT enabled services,
Right.
and which is where the bulk of the earnings for Indian IT sector also comes through. So my sense is, yes, a rate cut augurs very well. And yesterday's commentary, though kind of raises the bar higher for further rate cuts, but it hasn't completely eliminated the possibility of a rate cut. Honestly, I think I found the commentary very neutral, and my sense is 2 rate cuts are there in 2026 for taking, and if we see a change of Fed governor mid of 2026, then perhaps, and if someone from whom Trump favors comes in at the helm, then possibly you might see a better rate cut. So my sense is IT will start picking up now in that possibility and anticipation.
Right.
And US companies have any which ways been going strong, and rate cut further adds to that momentum. So my sense is it's perhaps time to start looking at IT again with a view of rate cuts and corporate profitability getting strengthened both in India and in US.
Right. One quick follow-up to that, Mohit. Do you think one should look beyond the Nifty 50 IT pack, and should one look at companies like, let's say, Persistent and Coforge, which are reacting a lot more favorably to the US Fed rate cut than the bigger in fact, TCS has gone into the red this morning right now, but Persistent up about 1.6%, Coforge up about 1.6% or so. The slightly mid-cap IT stocks, is that going to be the next driver of growth for India's IT investors?
Oh, absolutely. I think mid and small cap IT is the way to go. Honestly, I think the big boys sit on a huge pile of cash, and they've not been able to allocate capital efficiently for a very long while now. And they've been finding ways and means to do that, but it's not sufficient from a market's perspective. And my sense is more value has to be found in the mid and small cap space on the IT side, where you will see newer names and bigger names emerging pretty soon. So yes, definitely.
All right, Mohit Gang, thank you so much for your time this morning and for sharing your views on which way the markets and especially the IT stocks are headed from here. Thank you so much for your time. And staying with another corporate story, drug maker Cipla has launched a new treatment for obesity and type 2 diabetes, two of India's most urgent and widespread health challenges. In a regulatory filing on Wednesday, the company announced the rollout of Urpeak, a once-weekly injectable therapy, the drug that targets both GIP and GLP-1 receptors. It is only the second such brand to enter the Indian market after Eli Lilly received the Drug Controller General of India's approval. Urpeak is designed as an adjunct to diet and exercise and will be available on prescription in 6 quinpen strengths, ranging from 2.5 mg to 15 mg. Cipla said its launch marks a transformative moment in the management of chronic conditions, with global COO Achin Gupta emphasizing the company's commitment to expanding access to advanced globally benchmarked therapies. Under the collaboration, Eli Lilly will manufacture and supply the drug, while Cipla will distribute and promote it across India. The medication will be priced the same as Eli Lilly's existing brand, Mounjaro. And we'll slip into a very short break, but first up, all the other global stories that we're tracking for you this Thursday morning. A divided U.S. Federal Reserve trims interest rate by another 25 basis points, hints future cuts may be on hold as policymakers debate how much easing the economy still needs. US President Donald Trump says the Fed's latest quarter-point rate cut should have been at least doubled, calling Jerome Powell a stiff for approving what he calls a rather small move. Powell says the current overshoot of the central bank's inflation goal is largely due to Trump's import tariffs, adding new political tension to an already fraught policy debate. US lawmakers approve a sweeping $900 billion military package strengthening NATO defenses, a sharp counter to President Trump's repeated threats to downgrade Washington's traditional alliances. Donald Trump says he wants to ensure CNN lands under new ownership in any sale of Warner Brothers Discovery, prolonging his long-running feud with the American news network. And Donald Trump says tense exchange of words with leaders of France, Britain and Germany over how to end Russia's invasion of Ukraine, highlighting widening differences on the peace path. The White House opens applications for the new Trump Gold Card, a $1 million residency visa offering immigrants a fast-track route to U.S. citizenship. Chinese tech giants ByteDance and Alibaba show interest in buying NVIDIA's powerful H200 AI chips following Trump's surprise decision to allow high-end U.S. semiconductors to be sold to Beijing. And Elon Musk's SpaceX fast-tracks plans for blockbuster public listing that could raise $25 to $30 billion, positioning the U.S. rocket company for what may become the largest IPO in history. These stories on the other side of the break. You're watching Morning Brief at 9.
यार सोच रहा हूँ पॉलिसी बाजार से टर्म लाइफ इंश्योरेंस ले लेता हूँ ताकि मेरे बाद फैमिली को पैसों की कमी ना। तू भी ले ले यार, अभी तो यंग है यार, बाद में देखते हैं। आजा।
पॉलिसी बाजार पर 0 GST के साथ अब 1 करोड़ का टर्म लाइफ इंश्योरेंस सिर्फ 400 रुपए महीने से शुरू।
Our honorary speaker, A.K. Bhattacharya, India's foremost business and economy journalist with a career spanning more than 4 decades and author of the seminal 3-volume India's Finance Ministers. Eastern India's first Business and Economy Literature Fest 2025, 20th and 21st December, Taj Talkutir, Kolkata.
EIILM presents Bomber Lorry, Associate Sponsor. Mukhara Chowk, Associate Sponsor. Alliance Broadband, Associate Sponsor.
Light, camera, and action. Kick back, relax, grab your favorite snack because News9 is here with your weekend dose of entertainment. It's time to take a deeper dive into the buzzworthy happenings of the entertainment world. From celebrity gossips to exclusive conversations, from nostalgic moments to News9's pick of the week. Don't worry, we've got you covered here. And I hope you've grabbed your popcorn by now because News9's page 3 is here to serve you everything that we call entertainment. So do stay tuned every Saturday and Sunday, 2:30 p.m.
Welcome back. You're watching News9. This is Morning Brief at 9. We would have pivoted to the global stories, but before that, a quick Indian global story. That's right. The state of Telangana hosted the Telangana Rising Global Summit 2025 at Hyderabad's Bharat Future City from December 8th to December 9th. More than 1,000 global delegates from over 500 companies attended the summit, some bringing with them massive investment promises for the state. A record 5.75 lakh crore rupees worth of investment commitments have been signed through over 50 MOUs with the state of Telangana. The Telangana Rising Global Summit 2025 attracted top global and Indian business leaders, with many personally attending for signing MOUs with the state. Eric Swider, Director, Trump Media and Technology Group USA, announced 1 lakh crore rupees of investment for smart infrastructure and creation of a media hub. Other global industry leaders included Pham Nha Thuong, Chairman, Wind Group Vietnam, leading 27,000 crore rupees of sustainable urban projects, and Bruce Flatt, CEO Brookfield Asset Management Canada, with a 75,000 crore rupee net zero ecosystem via Brookfield Access. Now, among Indian corporate leaders, Gautam Adani, chairman of Adani Group, committed 2,500 crore rupees for green AI data centers in the state, and Mukesh Ambani, chairman Reliance Industries, oversaw 1,500 crore rupees of FMCG facility through Reliance Consumer Products. In the pharma space, Adar Poonawalla, CEO of Serum Institute of India, represented Biological E's 4,000 crore rupee vaccine R&D, and Kiran Mazumdar-Shaw, executive chairperson Biocon, discussed pharma expansions, including Aurobindo Pharma's 2,000 crore rupees. GMR Group signed 15,000 crore rupees for aviation and logistics with the state, and NVD Prasad, CEO Megha Engineering Group, pledged over 8,000 crore rupees for power mobility solutions. Together, leaders from India and the world engaged in high-level discussions amplifying Telangana's Vision 2047. Attendance focused on sectors like deep tech, renewables and creative industries. Let's listen in to Telangana Chief Minister Revanth Reddy saying Telangana is gunning to become a $3 trillion economy state.
As you know, Telangana is India's youngest state. It is full of exciting opportunities. Let me share the vision in brief. We want to become a $1 trillion economy by 2034 and a $3 trillion economy by 2047. We comprise around 2.9% of Indian population, but contribute around 5% of national GDP. By 2047, I want to contribute 10% of Indian GDP. Our strategy to make Telangana India's first and only state to be divided into 3 clear zones for service, manufacturing, agriculture. We call it Cure, Pure and Rare. Core urban region economy, that is called Cure. Peri-urban region economy is called Pure. Rural agriculture region economy is called Rare.
And moving on to global stories now, US President Donald Trump said on Wednesday that he believes it is imperative that American news network CNN be sold as Warner Brothers Discovery weighs a merger with Netflix, while also fighting off a hostile bid from Paramount Skydance. Trump's comments came after reports that Paramount CEO David Ellison told US President that he would overhaul CNN if his takeover succeeds. Listen in.
I think the people that have run CNN for the last long period of time are a disgrace. I think it's imperative that CNN be sold, because you certainly wouldn't want to put people, just leave those people with some money, good money, and CNN, so that, you know, they can spend even more money spreading poison, because it's lies. It's a disgrace. So I wouldn't want to see the same company end up with CNN, the same company with money, because right now they don't have too much money, but they have value, I guess, based on the bids. So they've got value. But I think CNN should be sold, because I think the people that are running CNN right now are either corrupt or incompetent.
And US President Donald Trump has launched a new investment-led immigration program offering wealthy foreigners accelerated US residency through a $1 million gold card visa with a higher tier platinum option under review. The Trump Gold Card is basically a premium residency program offering foreign applicants the prospect of becoming lawful permanent residents of the United States on an expedited basis, subject to strict financial thresholds and federal security screening. Chinese technology giants ByteDance and Alibaba have reportedly approached American chipmaker Nvidia to buy the H200 AI chips after US President Donald Trump allowed export to China with a 25% fee per chip.
ByteDance and Alibaba want to buy Nvidia H200 chips after US President Donald Trump approved exports to China. That's according to 4 people briefed on the matter who spoke to Reuters. Two sources said the Chinese tech giant want to place large orders for Nvidia's second-best AI chip if Beijing gives the green light. But, one added, the firms are concerned about supply and want clarity from Nvidia. The H200 chip's far more powerful than any semiconductor sold in China. Before Trump's announcement, the most advanced AI chip that could be exported there was the H20. The H200 is almost 6 times as powerful as the H20. The Chinese government has yet to give a clear response about Trump's move. In recent months, Reuters reported that Beijing had banned government-funded data centers and Chinese tech companies from buying Nvidia's AI chips. The information reported Wednesday that regulators gathered the country's big tech firms and asked them to assess H200 demand. The report cited sources who said the officials told the companies Beijing would give their decision soon.
All right, from EU antitrust probes to major new artificial intelligence investments in India. Here's your roundup of the biggest developments in the fast-moving artificial intelligence world this week.
From Google's EU probe to Amazon's big India investment, this is AI Weekly. The EU launched an antitrust probe into Google's use of online content for AI purposes. The European Commission said it was concerned Google may have used content from web publishers to generate AI responses on search results pages without fair compensation, or without offering them the possibility to refuse this use of their content. Google rejected a complaint by independent publishers earlier this year, which led to the EU investigation. The Commission's focus on big tech also saw it hit Meta with an antitrust probe. Regulators said they would look into the firm's new policy, which would limit other AI providers' access to WhatsApp. The EU said the investigation was to stop dominant firms from, quote, abusing their power to crowd out innovative competitors. US President Donald Trump said Monday Nvidia could sell its second-best AI chips to China. However, on sale of these H200 processors, Washington will collect a 25% fee. It's a jump from the 15% levy proposed in August. Trump said the same approach will apply to other chip makers like Intel and AMD. South Korean President Lee Jae-myung met SoftBank CEO Masayoshi Son on Friday to discuss expanding AI cooperation. Lee has pledged to broaden the South Korean AI sector. He's also met with global tech leaders including OpenAI Sam Altman and Nvidia CEO Jensen Huang. Amazon said it plans to invest more than $35 billion in India by 2030. The tech giant wants to expand its operations in the country by boosting AI capabilities and increasing exports. Major US tech firms, including Microsoft and Google, have poured billions into India this year. It shows the country's emergence as a strategic hub for cloud, AI and deep tech growth.
And before we end, US farmers hit by low crop prices and lost export markets due to President Donald Trump's new tariff policy welcomed a new $12 billion aid package by the US government, though many say the support still falls short of offsetting this year's steep losses. We leave you with that story.
U.S. farmers facing steep losses this year say President Donald Trump's $12 billion aid package will fall far short of what's needed to offset the income they've lost to collapsing crop prices and Trump's trade war. While farmers welcome the aid package, they, as well as agricultural groups and economists, agreed it will not rescue the struggling farm economy. One agricultural economist said farm losses this year ranged from $35 billion to $44 billion for the 9 major commodity crops, including corn, soybeans, wheat, and peanuts. Trump's Agriculture Secretary Brooke Rollins said the administration's ultimate aim is for farmers to have strong markets instead of farming for government checks, but added the aid package was necessary. Agricultural lenders expect less than half of farm borrowers to be profitable in 2026. Those borrowers said liquidity, income, and inflation are their top concerns. According to a November survey of agricultural lenders by the American Bankers Association and Farmer Mac, Trump's tax and spending law, called the One Big Beautiful Bill, could push some farm payments higher next year. While this is welcome and significant, another agricultural economist tells Reuters it is not enough to help farmers get ahead of mounting debt and higher expenses.
यही मौका है बिजनेस को बढ़ाने का, पर पैसा अब अपनी सुपर पावर यूज करने का टाइम आ गया है।
अब टेंशन मत लीजिए, IIFL फाइनेंस से झटपट गोल्ड लोन लीजिए और बिजनेस आगे बढ़ाइए।
आपके जैसे सुपर हीरोज ऐसी छोटी मोटी प्रॉब्लम से थोड़ी ना रुकते हैं, इसीलिए लाइफ जब भी आगे बढ़ने का मौका दे तो अपनी सुपर पावर, अपना गोल्ड यूज करिए और IIFL फाइनेंस से गोल्ड लोन लीजिए।
IIFL फाइनेंस करता है सीधी बात।
A resurgent India is racing towards the Viksit Bharat goal, braving global economic headwinds. Bulletproofing our economy from these uncertainties are Bharat's homegrown businesses. Powered by tech-led innovation, Indian entrepreneurs